It's my pleasure to have you here, Jeff. Thank you so much for joining us at Cross Border Venture Summit. So over the last 6 months, as I've been tracking, and I'm sure many people here have been tracking the Softbank Vision Fund, I've been continually impressed with Masa-san's vision for the Vision Fund. Continually impressed because it seems as though he views tech and the opportunity in tech completely different and even larger than what we in Silicon Valley think. I think many of us in Silicon Valley think many people maybe sometimes criticize Silicon Valley people that we're out of touch because we think we're all going to change the world. But I think Masa-san has 10x the vision for what he's doing than your average VC on Sand Hill Road. That's my opinion. You can quote me on that. So my question to you is, just to start us off, tell us a little bit the main points of the vision behind the Vision Fund.
Yeah, Masa is a unique individual, and he really thinks, he's talked about the 300-year plan for SoftBank. He really does think in decades and, long-term orientation. And if you think about, what has happened in technology over the last few hundred years, you had the Industrial Revolution, and then you had the PC and the mainframe as an important kind of differentiator and a change agent in our society. Then you had the internet, and you had mobile, and you had broadband. And now we're at the next stage. And Masa believes that's about singularity. It's about robotics. It's about artificial intelligence. It's about machine learning. It's about computational biology. It's about brain research. And it's really about robots surpassing the human's capability for intelligence, for processing large amounts of data, for making inferences and predictions. And it's going to change the way that we all live around the world. It's kind of like I was explaining to one of my 3 sons, everything that I read as a boy in Isaac Asimov or saw on Star Trek is really coming true. So I'm still waiting to be beamed to another planet, but space research is here. Space travel is coming. Automation is coming, and the way we live. And so the rationale behind the Vision Fund was, how do we raise a large amount of capital to back these extraordinary entrepreneurs who have visions of changing the world within his or her own respective domain? And that's what we're trying to do.
And how does, so it's clear that you and Masa-san believe this is a unique point in history where we're on the cusp of giant technology shifts. And this is a unique point in history to still enable and be a part of that, invest in companies that are going to be central to that singularity. How does that affect how you invest on a daily basis, that kind of rush to be a part of the singularity?
Yeah, well, we have internal theses and strategies around where we think various vertical industries are going to go. There are certain things that cut across all of those industries and across our investments within our portfolio. One of those is data, right? So our investment and acquisition of ARM was a part of the ability to capture data. Our investments in robotic companies, like we bought Boston Dynamics from Google, we invested in Nauto, we invested in Brain, we invested in iRobot. So the ability and a number of machine learning opportunities, the ability to not only capture that data across the IoT or Internet of Things, across every data point, but then the ability to process that data, make better decisions, and to drive the autonomy of those decisions through robots. So our investments in ride sharing companies, from Didi to Grab to 99 to Ola to the rumored investment in Uber, is really not about moving people from place to place. It's really about the data that you can capture from that, and what downstream businesses can you be in if you own the data around the delivery and the logistics of not just people, but of all things. What's the next generation transportation company look like if you have a play in that on a global basis? Right. So we think about those things, and as we're fortunate that deal flow hasn't been a problem. We get pitched every day by dozens of companies. Even if you brought Masa a company that is making the most amazing men's suits ever, and we can make a 10x return on that, He'd be like, not interested. Where's the data? Where's the technology? Where's the global impact on society? I'm like, but it's a really nice suit. And he'll be like, 10x is not what we're playing for, right? So we have themes, we have an approach, we have an idea where the world's going to go over the next 5, 10, 15, 20, 25 years. And we're making large concentrated bets in companies today that we think are the next generation of Alibabas, Facebooks, Apples, Foxcons of the world.
Right. How, back to the singularity that you mentioned, how that impacts humans? I think from where most of us sit, it's fairly unclear how it is going to impact humans. Do you feel like with this fund, Softbank is able to somehow kind of form that event, or let's say influence that event in a way that may impact humans more in a positive way?
Absolutely. Take, if you look at where large swaths of GDP are being spent around the world, one is real estate, right? But the second is healthcare. And here's a way to think about perhaps a thesis that is, if robots are going to do more of the tasks that we do today, more of the menial tasks, from washing your clothes to cooking your dinner to driving you to and from work and points of leisure, that means humans are going to have more time. Well, what are they going to do with more of their time? Are we going to move back to a sense of how we thought about individual intellectual curiosity during the Renaissance period? Are men and women going to spend more time in the arts and continuous learning and development in leisure? And therefore, what does that mean for content companies and entertainment companies? What does it mean for continuous learning companies like the Coursera's, Udacity's, Udemy's, Khan Academies of the world? So leisure might be a way. What does that mean for humans' health? Are they going to exercise more if they have leisure time? Or are they going to play more video games? So what does it mean about digital health and the manifestation of data in helping you have custom one-to-one healthcare? And so everything from genomics and computational biology to individual generation of therapeutics based upon your own DNA strand, both in a prophylactic and a prescriptive way, but also once you incur some of those ailments and diseases, can we cure that based upon your own body, the makeup of your genome, right? So those are some of the things that we're thinking about. The investments we can do is hasten some of the biological and biotech developments that will have us live healthier and longer lives.
So obviously, with this amazing vision, this huge vision, it's naturally an global fund, or you're making international investments. Can you tell us what is the focus of the fund geographically?
Yeah, so we don't have hard allocations, but you're sector by sector or region by region. But it certainly is a global fund, and the world, in many ways, not as many ways as I would hope, but in many ways, is coming closer together, right? Certainly from a technology and from an economic standpoint, political and culturally still work to be done there. And so if you look at where GDP is around the world and which countries will continue to grow over the next 20 or 30 years, the top 3 countries are going to be the United States, China, Japan. So, India, Japan. And so, my guess is a large part of our investments will be in U.S., China, India, Japan, and then the rest of the world.
Mm-hmm. And let's talk about the amount. I think, many of us are incredibly impressed by this $100 billion fund. We've never heard of such a thing. I think a common criticism of SoftBank Vision Fund is there enough great companies to invest in? Specifically, there are 267 unicorns which have all collectively raised $176 billion, collectively among all of them. But your fund itself is $100 billion, a good portion of that amount. So is there enough great companies to invest in $100 billion or make great, prudent investments with $100 billion?
It's a good question. So first, we don't have to deploy $100 billion in 1 year. So that's a good thing.
But less than 5.
I do get 1 or 2 weekends off. The second is we're not constrained in our fund to just private companies. So if you look, one of the very first investments we did was we took roughly a 5% stake of NVIDIA. Why? Because it's at the epicenter of creating data. And ARM, we bought at Softbank for $20-something billion. That's at the epicenter of collecting data through chips. Not dissimilar from NVIDIA, though NVIDIA makes the chips and ARM is more of a design company. And so if you look at the market caps of public companies, it's in the trillions. So there are places to deploy the capital, but we're not a hedge fund, so we're not going to try to get in and out of a stock in 9 days. You know, Masa talks about, you know, 10 or 20 or 30 years from now, we'll think about selling NVIDIA just like he thinks about Alibaba. He put, I don't know, $40–50 million into Alibaba. It's turned into something like $86 billion. There were plenty of chances to have sold along the way, but he's a big believer in what Alibaba can continue to do in its core markets and in the adjacent markets they're expanding in. So I think there'll be plenty of places to put the capital. The other thing is you're also thinking through the lens of a current or a fixed mindset of what venture capital is, right? We have a different view of it. In some ways, we have a kingmaker strategy. So if there's 8 companies that are all roughly trying to do the same thing, and capital is an important differentiator, either because you could run more experiments, you could move quicker, you could go geographic, you can own more of the stack and capture more of the economic rents. If we come and deploy $2 or $3 billion into that company, it's going to be very difficult for the other 7 companies to go raise a couple $100 million. So we think about it in a more nuanced lens or a different lens than what traditional venture capital has been. And people ask me all the time, and you did it 20 minutes ago, is like, who's your competition? We really don't have competition. We partner with every firm on Sand Hill, right? We're their Series D or E or F or G, and so we're not competing with private equity because we're not trying to buy companies and fix them. Predominantly, that's not our model. We're not trying to do seed investments. We're a late-stage growth company. We're looking for traction. We're looking for data, either in customers and revenue and transactions and amount of data collected that we can model that this has the opportunity to be not just a unicorn, but an Uber unicorn. I don't mean Uber, the driving company, but a really large unicorn like Alibaba. And so we have more data, so our decision-making should be less risky than an early-stage investment.
And back on the time limit, Masa does say that you're planning to invest in less than $5 billion. In less than 5 years. And I believe the media reports that about 25% of the fund has actually already been invested. So, are you considering the pace of investment? Are you ever concerned about overpaying or paying overly high valuations? Because you need to deploy so much capital in a relatively short period of time.
Yeah, I'll say this. We're very valuation sensitive, right? We've walked away from a number of deals recently because we didn't like the valuations. So we're prudent stewards of our LP's money, and so we're going to be very thoughtful about valuation. Having said that, because we're a 12-year fund with 2 one-year extensions, so think of us as a 14-year fund, and we're month 7 into that fund, we don't need to have a liquidity event for any time soon. And so in the grand scheme of things, if we have a belief set that this could be the next $400 billion company, arguing over a pre-money valuation of $1.8 billion versus $1.9 billion is not really that relevant for us. So I would say we're valuation sensitive, but we're longer term oriented, playing for much different outcomes than other fund structures.
And adding on to that, a typical VC fund is thinking they're gonna return the fund on their top 1 or 2 or 3 investments. That doesn't seem likely with a $100 billion fund, right? So, and also Masa says he's targeting a 44% IRR. So tell us a little bit about what is VC math with a $100 billion fund, and how do you reach a 44% IRR?
Yeah, so imagine having a parent who expects you to go to Princeton, graduate first in your class, be the captain of the basketball team, and play classical violin, okay? So there's high expectations, right. And we're assembling an amazing team that we believe can go and achieve that. Masa has achieved, across something like 1,700 investments, 44% IRR. And it's not just Alibaba. Yahoo Japan, Japan Mobile, you go through and you look at the returns he's had on a number of large companies. So because we're later stage, we think we're not necessarily going to get 100Xs where an early stage company might get. But if you get a 10X on a $3 or $4 billion investment, that's pretty good.
Yeah.
So I'm not so concerned about the gross MOM return. We are focused on the IRR, but again, we have the luxury of being invited to invest in the best of the best companies and to partner with the best and the creme de la creme of entrepreneurs. Right. And so there's a lot of hard work, and we still got to prove it. We're in our first fund and 7 months in, but we are confident that we're going to make a great return for our LPs.
We were talking about how the Vision Fund is not a typical VC fund, as you mentioned earlier. And as we've already seen that with an investment in NVIDIA, acquisition of ARM, of course you're also making lots of investments in private companies. Do you also intend to invest in other funds as well? As I'm sure there are many people in the room that would be interested if you said yes to this question. So.
Yeah, our Vision Fund prohibits us from being a fund-to-fund. Our LPs don't want to take 2 fees and 2 carries, as you can imagine. So it's not our strategy. We're assembling a team of investment professionals to go after late-stage growth companies that are tech or tech-enabled that are truly changing large industries and disintermediating the establishment. So not a fund-to-fund.
Okay. And on top of that, your mission, I believe, part of that is enabling the new age of innovation, right? Much of the innovation occurs in early stage companies. That could probably be debated, but nonetheless, extensive innovation happens in early stage. Do you also intend to dedicate a part of the fund to early stage investments?
So the smallest check we can write is $100 million. Oh. So there are certain early.
Is that a yes or no, everyone?
Alongside the normal flow of investment ideas, I get 20 or 30 people on LinkedIn every day ask me to invest $200K into their cupcake company.
How good is their cupcakes?
And they get mad I don't respond, but that's a whole nother story. So we're not really focused on early stage. Having said that, if it's an early stage company like we invested in Ryovant, which is a biotech, there's still R&D risk to that. So you can describe that as R&D risk, or plenty of vertical farming company that has beta farms out there but hasn't gone large scale yet. So we'll make, but when you open, biotech takes a lot of money. When you're opening farms, 300, 400, 500 farms around the world, it takes capital. So we will do earlier stage things that we think could be giant. If successful, that requires capital, and that's a key differentiator in their success. So a little later stage, 100 million minimum investment, and we're looking for some traction so that we can get comfortable around the bet.
Right. Okay. So how involved is Masasan in each deal? And how does the decision-making process work between the partners like yourself and Masasan?
Yeah, Masa is involved in every single deal. And he's brilliant, and he has an amazing ability to very quickly assess if this is an entrepreneur that he believes in and that he wants to back. And so every company we invest in, Masa goes through our investment thesis, the returns, the strategy, the positioning, how it fits into the portfolio. And every single entrepreneur has to meet Masa before we make an investment decision. It's part of our process. Okay. And so sometimes we're flying to Saudi Arabia or Tokyo or Woodside or New York or Patagonia, Chile, to go meet with Masa. But I've been in 25 of these meetings now, and each one of them is unique and fascinating. Because while he's an amazing CEO and he's a successful billionaire and an investor, he really thinks of himself as an entrepreneur. And so to watch that rapport that he has with fellow entrepreneurs, there's something pretty magical about it.
I think you're kind of alluding it with the value that Masa can provide, but beyond capital, tell us a little bit more about what SoftBank, the value that SoftBank can provide their portfolio companies.
Yeah, so I think about it as we bring capital, counsel, and connections to our portfolio companies. And we kind of are uniquely differentiated from many other Silicon Valley or US-based funds, and like a lot of people say, oh, we got a couple people on the ground in Asia. We have a lot more than a couple people on the ground in Asia. I think it's 100,000 people on the ground in Asia. Plus, we own companies, right? So there are synergies. So, for example, I ended up passing on this, but it was a mobile security company a couple weeks ago. You know, overnight, we could have deployed them on every Sprint phone, you know, across the globe. So we get to bring the power of the companies we own, the depth of the relationships we have with our portfolio companies, and so we're encouraging and helping them go global. We're helping them to do deals with each other, if that makes sense for them. We're helping them manage through geopolitical risks, because Masa and the Softbank team, we have relationships with the heads of many states. So if it's an energy play, if it's a transportation play, if it's a regulatory play in healthcare or other things, our relationships at the highest levels of governments helps to get the right conversations started. And just the size and breadth in our brand opens doors that, you know, other firms can't do. So I think about it as bringing the capital, the counsel, and the connections. And one of the things that I enjoy, having run large organizations and scaled them, is writing a check and doing a deal is easy. But living with that deal for 5, 10, 15, or 20 years and helping those companies go through the various cycles of growth and scale, I get to bring that unique perspective, having sat in that chair of that CEO or that operator. I've taken a number of companies public and been associated with you know, dozens of board roles. And so we're kind of more involved, and we've seen things at different scales that I think we get to bring that other venture partners or venture firms don't necessarily have the same experience.
Yeah. I mean, building onto that, kind of the flip side of that is that your Softbank is so active in many late-stage companies. So naturally, you're going to be investing in competitors. I mean, I think we've seen that with Flipkart, Snapdeal, Lyft, or not Lyft, but DD, as well as, I believe, Grab in Southeast Asia, and of course, the rumored investment in Uber. How will you handle these potential competitive issues between portfolio companies?
Yeah, so one lens is to think about them as competitive issues, and the other lens would be think about them as collaborative issues. So Uber owns a piece of Didi, Didi owns a piece of Uber, Didi owns a piece of Grab, right? And so you start to roll through that. If we have a strong conviction and a thesis in a particular industry, can we help companies best practice share, technology license, cooperate in different ways, in a way that, because we're involved with them, we could bring them to the table where sometimes the competitive nature or the CEO's egos might prevent. So I think about it as, yes, there's some competitive issues, and obviously we create Chinese walls between, you know, we won't sit on both sides of both board seats, and we have all the appropriate corporate governance and understand both our fiduciary responsibility and duty of care and duty of loyalty, all of those regulatory and good corporate governance stuff. But I see it as the power of what we could bring to get discussions started in different places that is pretty unique in the landscape.
This Vision Fund is so different, and it is both in scale and in vision than other typical VC funds, that naturally it will have a very significant impact on the industry, the general VC industry. How do you expect the Vision Fund to impact the VC industry outside of SoftBank? How does it affect the greater industry?
Yeah, I think if you think about what are the key enablers to building a great business, obviously you have to have product market fit, you have to build a great brand, you have to attract and retain a great team, and you need capital, right? And many businesses fail because they're not sufficiently capitalized. And so we help companies scale quicker. We help them, given our pattern recognition and experience and the size and the scale and the interrelationship of the portfolio companies and the best practice sharing, we help them avoid some of the pitfalls and the learning curves. And so we're hoping that the companies that are in our portfolio, they could become bigger quicker, and they could avoid a number of the mistakes, and that they can have a more expansive vision. And that is where Masa really is genius in working with the entrepreneurs, just like he did with Jack Ma, instead of thinking about what you are today, unlocking the potential of what you could be in the future, and maybe perhaps thinking from a vertical to being a horizontal, right? And because we're patient capital, we give the flexibility and the freedom to our CEOs to think in a much more expansive way. And it's really exhilarating to sit there and have someone go, I think I'm in this business, and 2 hours later go, oh my God, I'm really in this business. And therefore, the sequencing of the investments I was going to make, that like international was on the plan 3 years from now, I could actually do today. Or yes, I was at eBay in the early days. We were a auction platform. Well, we also then bought PayPal, and we were in the banking business, right? And when Pierre started eBay, there was no vision to be in the banking business, right? We did it because we needed to reduce the friction between our buyers and sellers, and the traditional banks were not technologically advanced enough to be able to provide that type of mobile and online payment system. So we help unlock the vision to be more expansive, and that's a really exciting place to be.
I guess I'll make this question even more specific. The IPO market is already at a fairly low point relatively. Now with the greater availability of capital at late stages for these very late stage unicorns, one would assume that they would delay IPOs even longer. So how do you think this is going to further impact the IPO market, especially down the road, as a few years down the road after the fund's been investing for a couple of years? How's it going to affect the IPO market, and then of course the greater impacts on the VC industry?
Yeah, so last stat I saw, the Wilshire 5000 has something like 3,814 companies in it, because many companies have gotten bought or gone private or went bankrupt. And having been a public CEO, there are a couple of reasons why I think companies aren't going public in the same pace as before. One is regulatory and governmental, and the complexity of our regulations. The second is, if you look at hedge funds, they're incredibly short-term oriented. So when I was a public CEO, I got into a discussion with a very, very large famous hedge fund, and they're arguing about their long-term nature. And I said, well, here on my tear sheet here, it says you tend to hold a stock for 23 days. And this very wealthy, very well-known billionaire slams the table and says, that is just a lie. We hold them for 34 days. And so if you're an entrepreneur or CEO, do you want an investor base that is 34 days mentality? And that's the challenge. And then with the rise of activism, I think the last stat I saw was 97% of Fortune 500 companies have had an activist in the last 3 years. Activists will play the card that, hey, we're doing good for the mom and pop investor, looking out for, bad corporate governance or ineffective management. By the way, there are cases of that. But large in part, they want a quick pop in the stock so that they can make money in 34 days. And so regulation, short-time-mindedness from public investors, and by the way, less than 7% of all hedge funds beat their benchmark, and they take high fees. And then third is the availability of a different type of capital. And that's sovereign wealth, that's venture, that's private equity, a longer-term mentality. And there's no one longer-term mentality than the Vision Fund. So if I was going to be an entrepreneur again and start another company, I'd much rather be private longer. You don't have to worry about quarter to quarter. You don't have to worry about, well, how could I possibly do this, even though it's the right thing to do, but I got to take EBITDA margins down by 2 points. My stock's going to crater 30%. And because robo-investing through dark pools and algorithms, you look at just today, look at Tesla's move, or you look at Facebook's move after market, or you look at GoPro on the other side, or you look at Chili's, or you look at Shake Shack. Stocks are moving 10, 15, 20% on pennies of EPS. And that's not because of humans. That's because of algorithms. And so the markets are broken. My belief, it's not Softbank's view per se, my belief, having spent the last 11 and a half years running a public company, is the markets are broken. And so we're given the luxury and to our entrepreneurs not to have to deal with that inefficiency.
Insightful. We have time for one last question. So Massa's announced that he plans another vision fund at the same size, $100 billion, every 2 years. He's clearly very confident in his ability to continue to raise those sort of funds. But I mean, to be frank, there are only so many entities in the world that could write $50 billion checks, as I believe Saudi Arabia did, or approximately. So tell me, what is the value proposition to LPs that is clearly very enticing? And then B, what type of LPs are you targeting for the future funds?
Yeah, it's been really interesting. I thought I'd get out of the limelight as a public CEO and go to a quiet venture capital firm. And we were in the press 3 or 4 times a day. And what's interesting, about half is exactly right, and the other half is not even close. But you go figure out which is right and which is wrong. I think what Masa was trying to convey when he gave a speech recently was, we believe there's sufficient amount of capital that people like what we're doing and the new model that we're doing, that they would like to be part of that experience. And so while I strongly believe we'll continue to raise funds and deploy more capital and have more capital under management, my focus is to make the first fund successful. We're 7 months into it. So let's go make a great return for our LPs, and I'm sure more LPs will show up to provide capital.
Sure thing. Well, those are the final words. Please join me in giving Jeff a hand. Thank you so much for being with us. It's absolutely our pleasure.
Thanks for having me.
Yeah.